What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I got 5 of the best monthly dividend stocks and/or ETFs to buy right now. I'm buying these. I'm definitely buying the dip. I'm definitely buying these ETFs as well as monthly dividend stocks. These have consistent dividend increases or consistent dividend income. We are 6,200 dividend warriors strong, by the way. So again, these videos are free to you guys. All I ask you to do is subscribe, hit the notification bell so you don't miss future videos, and smash that like button. I try to get 3 to 4 videos a week. After November 2nd, I'm going to try to pump out 5 to 7 videos a week. I may do a shorts on just individual dividend stocks on in between days I work. So I haven't decided on that yet, but I may be doing that. Let me know what you think. I got a bonus stock. This is a closed-ended fund. One of my buddies tipped me off on it, and I'm going to give him props before I discuss this stock. But you guys are amazing, and I cannot wait to keep on going and build this channel up for you guys. So you guys are fantastic. So let's check this out right now. That first stock is Global X NASDAQ 100 Covered Call ETF. That is a monthly dividend ETF. It uses covered call options, and I don't have time to do covered calls. I'm in graduate school, working on the floors as a nurse. I just don't have time. So I'm doing papers, doing videos, and doing all this stuff. My head is spinning in circles, and these guys distribute a nice monthly dividend, which is within the 17 to 20 range. I'll go over that shortly. But this is such a great covered call ETF. I'm going to go over this real quick and explain to you why I have this on my M1 Finance dividend portfolio. Again, QYLD writes call options on the NASDAQ 100 index, saving investors the time and potential expense of doing so individually. QYLD has made monthly distributions the past 7 years. It generates income through covered call writing, which historically produces higher yields in periods of volatility. So when I always look at ETFs, the biggest thing is expense ratio. So we need to figure out what their expense ratio is, which is important. So because you can really get ripped off on certain stocks with their expense ratio. So it's 0.60%. This is not a Vanguard style expense ratio. Vanguard is like 1/10 of that, like 6%. This is 0.60, like 60 out of 100. The other one's 6 out of 100, if you want to think about it that way. But what I like about these guys is a buy right strategy that they have and the monthly distributions that they distribute, which I'll go over right now. So worst case scenario, you're going to get 13 cents on QYLD, and best case scenario, let's just say 23 cents. So you have a range of 13 cents to 23 cents of distribution for QYLD. It has a 10.4% dividend yield, and its annual dividend can change and fluctuate. So if you go on NASDAQ and look at its dividend history, it usually ranges between, I'm going to say, recently 17 cents to 22, 23 cents. So you're going to get among that range. Again, I don't have time to do covered call options and covered calls. I don't have the money. I'm putting money into school. Once I start travel nursing, that's a different story. I'll start messing around with that and trying to master covered call strategies. But I'm going to jump to the next dividend stock. The Realty Income is my next dividend stock. Now, I did a covered call ETF. Now, it's good to diversify your monthly dividend portfolio because Realty Income is the monthly dividend stock. This is a stock that increases its dividend over time. QYLD is not normally going to increase its dividend. So that's why I have 100 shares in Realty Income. My goal for QYLD is to get enough money and rack up enough shares so that I can start buying my quarterly dividend stocks, and then my quarterly dividend stocks can start buying my monthly dividend stocks. But Realty Income is a very well diversified real estate investment trust. It has over 6,000, they're a landlord to over 6,000 tenants, and they're well diversified in pandemic proof and recession proof companies. And that's the thing. These guys are paying rent. These guys are generating cash. And don't forget, a real estate investment trust or a business development company has to pay 90% of what they make back to us, or else they get penalized. And I don't think you want to get penalized. So to classify yourself as a real estate investment trust or BDC, that's what you got to do. So its dividend yield is 3.96. And again, it has not done very well against the S&P in the past 5 years. That's great. And I'm going to show you why. And here's the thing about Realty Income, as they call themselves the monthly dividend stock. QYLD is going to give you a range of, let's just say 17 to 23. Again, this is not financial advice. It's for entertainment purposes only. Disclaimer in the description. You're going to get about 17 to 23 cents, okay, with QYLD. I don't think it will ever go to 30 cents, but these guys, Realty Income, look at this, 2013, it was at 18 cents. This is monthly distributions. Now it's at 23.6 cents or 0.23, almost 24 cents. So you're getting consistent increases. Now, again, it's 71.57. I have 100 shares in these guys, and I'm just reinvesting and letting it fly. These guys have not done well against the S&P since the pandemic. That's great because you know what? Even though it's 71.57, you're getting consistent dividend increases versus, a stagnant line in a stock that just increases its price per share, and then it starts not to get affordable. So the more shares you have in somebody like this, you're going to get consistent dividend increases. You're going to have the opportunity to buy more shares. So I'm going to jump to the next dividend stock. And that next one is RYLD, Global X Russell 2000 Covered Call ETF. This is another one I have in my M1 Finance dividend portfolio. So I'll go over that shortly with what these guys are about. And again, with Global X ETFs, they are a little bit more expensive, but I like that dividend income. That's why I'm in these guys, for consistent dividend income, my M1 Finance dividend portfolio. And I have a replica of my M1 Finance dividend portfolio. There's also a special. I'm pretty sure if you sign up using my affiliate link, we both get $30 to put in our dividend portfolio. So check it out if you're interested. You got the Death Star replica and everything as well. So here's the thing. Monthly dividends. And the crazy thing is QYLD and RYLD usually distribute dividends on the same day in my M1 Finance dividend portfolio. So I love it. I'm having shares in these guys and shares in those guys. And again, I want to make at least $100 a month just on these guys, and then $100 on QYLD. So I'm going to show you what RYLD is about real quick. So its top holdings, it does cover call options, and it does the Vanguard Russell 2000 ETF. VWTO has a little bit of cash on the side. So the thing that's important are it's since inception, the market price and the index. Okay, that's not bad. But again, the expense ratio is 0.60%. So that's a little bit on the pricier range. But I'm going to tell you, with its dividend history and its monthly dividend distributions, this is why I own them. So let's check that out. You're getting, in 2019, 23 cents. So you're getting around, let's just say 15 cents at worst, to about 24, 25 cents. So let's just say 17 to 24 cents, and it's 25.05 right now. So it's not gonna grow like crazy. It does cover call options, and I just, these dividend increases, I don't know yet. I mean, I'm iffy. That's something that I don't feel too confident in yet, but my gosh, buying stocks like this and getting those monthly distributions, an expense ratio is not bad. I mean, 0.60% is not bad, but you're getting those monthly dividends. So that's one of the reasons why I got these guys with covered call options. Let's jump to the next dividend stock. In my honest opinion, one of the hottest monthly dividend stocks right now is LTC Properties. It has not done well against the S&P in the past 5 years. It's sitting at $33.98. It has a dividend yield of 6.70%. Now, PE ratio is one thing, but FFO is important. Now, these guys, I've done numerous videos on them. They focus on skilled rehab and basically facilities where adults, long-term care, these facilities are at, and these guys get money from people staying in beds, and then they pay their landlords, and this is how these guys generate cash and distribute dividends. And again, it's $33.98. So you're getting, the elderly population is getting older. I know nobody wants to go to skilled rehab. Nobody wants to be in a permanent facility, but people need to be there. I mean, it's, there's people with very unsteady gaits. There's people that are getting strokes. There's a strong correlation with heart disease, strokes, amputations from diabetes. People are just getting sicker, and the obesity rate's getting worse. They're saying about 2050, 1 in 3 is going to be obese, and 1 in 3 is going to have type 2 diabetes. That's just disgusting. I mean, complacency is the norm now, and people don't want to take care of themselves. I'm just being honest with you. Just go to the gas station. How many people still buy cigarettes? Why do you think we invest in Altria stock? Because people are going to buy it. It's a sin stock. They don't care. It's unfortunate, but that's just how people have this mentality. They just don't care. Very sad. And I hate saying this, but smoking, obesity, and all that, these are going to keep these guys like LTC Properties in line. And I'm going to show you their dividend history. So very slowly over time, LTC Properties has increased its dividend. It was at 17 cents. It's at 18 cents. It's stagnant right at 19. Again, this is not financial advice. They're going to hit the 20-cent mark eventually, and they have a 6.64% dividend yield. So they are a very hot monthly dividend real estate investment trust, and that's one that I have in my M1 Finance dividend portfolio, and I can't wait to start buying more. I have like this fractional share section that I'm really focusing on with these guys, and I need to get a certain percentage down, and then I'll start racking up some more shares. But I'm way up there with these guys. These guys are getting me probably about $8 or $9. So, I've been very tempted to just buy these guys individually and put them on E-Trade and just reinvest. So this one's very hot. I have them right next to Iron Mountain. I have about 60 shares in Iron Mountain, and I just like the way LTC Properties is really doing some damage for my M1 Finance dividend portfolio. And this is a great monthly dividend stock. And I'm going to jump to the last dividend stock, and I'm going to show you this closed-ended fund based on a tip-off. Somebody told me to check it out, and I really like it. But let's jump to the last stock. Last one is the Global X S&P 500 Cover Call ETF. This is a very popular monthly dividend ETF. It's sitting at $50.18. This is one that I have in my M1 Finance dividend portfolio. And again, my goal, trying to get to $1,000 to $3,000 a month, my monthly dividends, and $2,000 to $4,000 a month, my quarterly dividends. The crazy thing is, if you have an M1 Finance dividend portfolio, again, you can use my replica. That I'm totally fine with it. That's why I'm pretty transparent about this. QYLD, RYLD, XYLD, I always get distributions on the same day. It is like Christmas every time, because I'm getting more shares of QYLD, RYLD, XYLD. Once I really start racking up that monthly dividend income, it's going to be very exciting. And XYLD is one that I really like. I'm going to go over that real quick. Again, it writes call options for the S&P 500 index. So right here, you got Apple, Microsoft, Amazon, Alphabet, Facebook, Alphabet other class, that's class C. The other one's class A, Tesla, Nvidia, Berkshire Hathaway B, and JP Morgan and Chase. So you got some big juggernauts in the S&P. And again, this is seeking monthly distributions. It's been 8 years strong. The expense ratio is 0.60%. That's not bad. Again, it's very attractive. It is a very attractive dividend stock. They haven't put XYLG on M1 Finance. Hopefully they do. I'm going to add XYLG eventually, but this one is so attractive. I think of the three, a lot of people like this one the best. And I can understand why, because of its portfolio. And I'm going to show you its dividend distribution real quick. So right here, it's 21 cents, 39 cents, 44, 45, 47. You're going to get, I don't know if it'll hit 47 for a while, but it's a very attractive dividend stock. I think of the best of all of them, I think O is the best one with monthly dividends, but with the expense ratio and all that, XYLD is extremely attractive, and the S&P is just going to go up. It's hard to tell, with consistent dividend increases, because it's kind of a scatter bomb. It follows a lot of things, but I was against those guys, and then I changed my mind. I'm like, okay, I really need to implement these strategies, so I'm going to do this. And I'm going to show you the last closed-ended fund. It's really exciting. to look at. It's very interesting. It's a very interesting closed-ended fund. So I'm going to give my buddy props real quick for finding this, and we'll go over it. So this is my buddy Stevo on the go on Twitter. It's at NC Stevo is his name. Make sure you check him out and follow him. So he showed me a closed-ended fund. It's actually not a monthly dividend stock, but it is a very attractive. And I got to show you this because I'm not a big fan of closed-ended funds, but this one you might want to check out and do a little bit of digging on before you pull the trigger. That is the Liberty All-Star Equity Fund Common Stock. The symbol is USA. It has a 9.78% dividend yield, a PE ratio of 3.29, market cap $1.92 billion US dollars. Its year range is 577 to 946. So it's not doing too bad. It's increasing its price per share. So that's very attractive for a lot of people who love dividends. And this is a very interesting close-ended dividend stock. I'm going to show you this. It's not a monthly dividend one. This is one that's kind of a quarterly, but very attractive. Let's do some digging. So I'm on Fidelity right now, and again, you always want to see what the expense ratio is. It's 1.02%, which is not bad. And again, you're getting a stock that is increasing its price per share. This closed-ended fund is increasing its price per share. I'm going to show you what's inside of it that makes it very attractive. And I'm going to show you that its dividend increases over time, which makes it amazing. So again, 1.02. When I had Brookfield Real Assets Income Fund, it was pretty stagnant. This one's going to have consistent dividend increases, and it's increasing its price per share. That's what makes it really attractive. Its benchmark index is the S&P. It's closed-ended fund, 156 total holdings. So obviously it's going to be in the red because of the pandemic, but it's back in the green. The past year, it was 35.32% increase, 3 years, 15.10%. 5 years, 15.91%, and 10 years, 14.57%, and for life, 8.92%. That's not bad. Top 10 holdings are PayPal, Amazon, Facebook, Safe Street, Adobe, Alphabet Class C, Visa Class A, Microsoft, United Health Group, and Salesforce. These are all stocks that increase their price per share. And in this closed-ended fund, take a guess. It is in very powerful companies that are going to go up and increase their price per share. Amazon's one of them. PayPal's one of them. These guys are some juggernauts. Adobe's really popular. How often do you use Adobe? So these are companies that are in demand that usually increase their price per share, and they're very powerful. And I have to show you their dividend history real quick. It is so attractive. Look at this. 9 cents, 10 cents, 14, hit a little bit at 12. Now it's to 21. So you're getting a consistent increase. It's increasing. You got a quarterly dividend. It's $8.57. So this is a stock that will increase in price per share, increase its dividend over time. I'm not normally a fan of closed-ended funds, but this is very, very attractive. So a lot of you guys that like closed-ended funds that are dividend investors, and Steve-O, great catch in this stock. I really like this one. This is definitely going to be on my radar. I think a lot of my subscribers on the YouTube channel will really like this one and do some digging. And again, this is not financial advice. It's for entertainment purposes only. Steve-O, same thing. It's just, it was for entertainment purposes only. He did not give me any financial advice, and I'm not giving you financial advice. This is, is my disclaimer is in the description. This is a equity fund. USA is a symbol. So that's very easy to find. So I want you to check that out, look into that one. Let me know what you guys think on this channel. And if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a great Friday.